Hey everyone, this is Will coming back with another portfolio review. Ending the week with me being down a little bit, and we'll kind of talk about that. A lot of it's due to the coronavirus. Might as well give my 2 cents on kind of what's going on with that. And just kind of, giving some more investing advice because there isn't enough out there. And, the more this video and other videos like this can reach people, the better. So right now I have the past week up here. If I look at the past day, you can see that my portfolio dropped $20. But overall in the week, it went up $3. But again, still not where I want to be. And then you can look at the last month also being down as well. Every one of these companies is down by a certain percentage point. T-Mobile, I guess, is up, and Duke Energy is up. But everyone else is just down because of the current, news that's in the news right now with the coronavirus. The last thing is I did buy 2 shares of Altria. Very controversial stock because they are a company that manufactures cigarettes in the U.S. But I mean, if you look at how much they pay you, and that's something that I can go over in another video, looking at what their dividend is, it's huge. It was I think $3-4 per share, and I got 2 of them. So over the course of the year, it's a good payout, and that's kind of why I invested into them. And I got them at a really good deal, I think. If we look at the past month, they're down quite a bit. I mean, still higher on the 3-month, but still able to get a good value on them. Plus they pay dividends. So yeah, kind of a more controversial pick, but put $100 in, and I found a stock that I like best. I thought about doing some more dollar cost averaging with Wells Fargo, but we'll get to that when I get to the stock portfolio portion. And kind of, I guess, the main topic of when is the best time to invest. And for someone that may have started investing this week, they're probably scared shitless right now. Or I mean, even a month ago, but for me, over the all time, I'm still up on everything. So it doesn't bother me as much. Someone that has a bigger portfolio, it might worry them a little bit more. Because I was, at $100 in gains. I had that. I'm pretty sure it was in the last video that I had that. And then with the coronavirus, everything just started tanking, but that's all right. I think if we look at history, I don't think I've really gotten paid too much in my dividends quite yet. Pretty much since the last time I got a dividend check from GE, not much. Something else I might look into is buying more GE just so I can get a bigger dividend from them, but we'll think about it. I deposited $100, bought Altria with that, and then this is how many hours ago. So this was the 31st. I got 47 cents from this ETF, and then from New Residential, I got $1. So that's nice. And then in a couple days, AT&T will be paying me, and that will be 52 cents. So nothing to complain about there. Yeah, and this is basically my stock portfolio. So we'll get to that. Moving over to M1 Finance, we are kind of looking at the same scenario. We've got a lot of sections that are starting to go down, and there was a point where everything was up. Everything was doing really well. But you can it's hard to see because it's a little bit different than how Robinhood displays it. It's a little bit different than how Robinhood displays it, which can be tough, but I was going up, deposited more money, and then it was down, down, down because this is when the coronavirus part started. So there was a point where I was sitting at, plus $40, because I've invested $1,500 plus $40 right there. But you can see my dividends are starting to go up. I still have market gains, so that's really cool. Overall, my portfolio on this is up 4%. And we'll talk about it again, just as a reminder. This is basically a recreation. It is a recreation of Joseph Carlson's portfolio. I can't remember in the last video if I touched on it or if it's something I've thought about. In the future, this is definitely very easy where it's something it's I don't see value from this one, I'm going to switch it to something different. Or, if I go into healthcare and I'm I just don't see this company doing it for me, so I'll sell them, sell the equity I have in them and then buy a different company. That's something that I could do in the future. It's just, this is a good base building block to build from. And, if I go into telecom and I'm like, I really like T-Mobile, that's the phone company I have. I believe in them. I could always add that to this company or to this pie. So it's always something that I can, work towards in the future. But as far as activity, again, not a whole lot. So just trying to look back. Okay, so I did actually get quite a few. So I'm trying to think of when the last time. So this is probably the last time because January 17th is when I last recorded it. We're now February 2nd, so a couple weeks later. So Cisco's paid me, Comcast has paid me, JP Morgan actually paid me quite a bit, quote unquote, for what I normally get. LTC Properties, New Residential gave me $1. That's quite a bit for what I normally get. TD, Toronto Bank. So this is something that I have not personally covered yet, but since this is a Canadian bank, anytime they pay me a dividend, I have to pay taxes on that immediately, where normally this stuff gets taxed during tax season. And yep, made some trades and had some activity going. So again, this hasn't dropped too much just because I don't have as much in there, but if we look at the last week, I'm up in dividends, but I'm down like overall just because of how the market's been with, people freaking out, and even worse so on the last day. The month isn't as good, but yeah. So kind of the main piece that I'm trying to get at is, when is a good time to invest? Well, any time is a good time to invest, but when stuff is dropping, like right now, for the most part, I've been pretty much green on my gain loss on all these, and now a lot of them are starting to turn red. This is when it's a good time to start investing. You can see that I added Altria Group down here, and they're down $1 since I bought them, but that's fine, because I know they're going to go back up, or they're going to pay me a dividend, which is going to pretty much make up for the net capital gain loss I've made on it. But, I was looking at Wells Fargo and I see I'm down $10. Like, I could really average this down quite a bit. So then when it goes back up, because right now their 52-week low is 43. And if I can average that down, that's really good. So, some people get scared at this point that they're like, oh my gosh, everything's going down. I need to sell. I could walk away with $60, but it's like, you could walk away with $60, or you could buy these companies, and when they go back up, you can make a whole lot more. It's just risk tolerance. And I think like this is way more diversification than you ever need to do. This is like outrageously too much. You don't really need to go this crazy in terms of diversification. I even have like 14% of my stock holdings as ETFs, which is diversified holdings, even more so. So why did I decide to do that? It's just risk tolerance, because I'm still going to be paid dividends. I'm still going to make money from this, but now it's just lowering my risk tolerance, because it is so unlikely for every one of these companies to be going down. I wish I had like a percentage of how many are down right now, but it's like maybe 40%, and I'm still up $60. Like, it's just crazy. Look, Coca-Cola is still doing well. I'm up $16 from the 3 stocks that I bought. That is huge. Duke Energy, I'm up $10. Sprint, I'm up $8 because I didn't buy that. Okay, so skipping that one. TD Ameritrade, I'm up. Charles Schwab, I'm up. And that's what makes up a lot of my gains, is because I just one day woke up, got paid, invested in these companies. I just bought their stock at whatever price they were at that day, and they've gone up. Same thing has happened with Wells Fargo, and same thing has happened with, Prudential Bank Corp Inc. I bought them one day and they've gone down since. It doesn't make a difference because they've still paid me. Again, if we bring over to this slice, I am a month into January and I'm already like 3/4 of what I was paid in full from these 3 months. So it's going up, and I haven't updated this because I just want to see how close I actually get. Obviously I'm still investing in companies because I want to make more money. It might be something that I update. I'll leave this, copy and paste it, and like move it over here and say projected dividends for 2020 as of, do like 2-1 and then add Altria Group in there and whatnot. So like this is what I'm looking forward to. This is what I'm investing for, is these dividends, because this will eventually be money that gets put into my account that I can then use to buy more of these companies. Instead of me having to take money from my check, I can just take the money that I'm earning from these companies that are paying me and invest back into them. That's where this income, that's where this growth is going to come from, is not going to be from me putting money in. It's going to be from these companies paying me. I might have to look into, selling off the companies that aren't going to pay me a dividend, like Zanga Corp is, they don't pay a dividend. Therapeutics MD, they don't pay me. Sprint and Glue, they don't pay me because I got these stocks for free through Robinhood. But again, just something to think about. Still getting over this cold that I had. Not the coronavirus, just a cold. Still being okay. Just have some coughs here and there. But water helps out. So kind of on that coronavirus thing, since I brought it up, everyone's worried. I have lived through swine flu, bird flu, cow flu. Like it doesn't matter. Where I live, I'm not going to get affected because there's not a lot of, there is a lot of travel through where I live because of the Mayo Clinic, but I'm safe, where I'm at. Because we live in the United States, if you're not in the United States, I'm sorry, but I'm sure if you're watching this video, you're probably in a place that has okay healthcare. You're going to be fine. There's no reason to worry. This is because of the news, thankfully it's making my stocks go at a cheaper price. And here's the way that I kind of explained it to someone, and I think it's a pretty good analogy. Say you're someone that likes to buy Mountain Dew. You'll buy it for $4 a 12-pack. I don't know what it actually is, but that's a really good price. You buy it all the time. Now it's on sale for $2. Guess what? You now can buy the same delicious Mountain Dew 12-pack. You can buy 2 cases now for the same price that you used to buy. Now, if it goes up to $6, you're not as happy because now you have to pay $2 more to buy that same 12-pack. So you might hold off. But when it's on sale, like some of these companies are right now, like $46, that's $3 away from being the low. This is Wells Fargo being on sale right now. Like if you're looking for a good company to invest in, Wells Fargo's that right here. What's another one that's dropped quite a bit? $3. Energy Transfer. They pay a pretty good dividend. If I pop over here, $1.22 over the course of a year, and that's for each stock. That's for each stock too, $1.22. And Energy Transfer is at $13. So you only need to put in $15 and they're going to pay you $1.25 over the course of a year. That's pretty good. That is really good. And they're on sale right now. I mean, for $12.59, because they're a couple dollars away from being at their low. And I bought them when they were a couple dollars, like $3 away from being their high. Still don't regret it. I mean, that is awesome value, I think, honestly. And you can also get companies like Ford and Mazda that, don't pay a whole lot. Ford pays out 60 cents. Mazda pays out 14 cents, so a little bit worse. But, they're so cheap. Like, these are cheap companies to purchase into that's going to pay you back. So, yeah, that's kind of my little rant as far as when the market's going down like it is, don't worry, don't fret. Just keep investing, because once we get out of that dip, once we get out of that dip, it's just going to go back up. It happened to me also earlier, like right away when I first started investing. I was up $10 here, and then all of a sudden, I wasn't. But then it went back up, went down a little bit, went back up, and went down. But then it went back up again. It's a constant cycle, and that's something that you guys need to, keep looking at. So I guess with that, the last thing since my M1 portfolio hasn't updated, we're not going to cover that today. But looking at this, I've tried to update it as close as I can, kind of taking a snapshot of what everything was at yesterday. My loan's been paid down a little bit more. Once I get my tax refund back, still trying to decide entirely what I'm wanting to do. Obviously, I would love to be able to put my refund into investments. Like, that would be amazing. But at the same time, paying this down would also make it go up. So it's kind of like the teeter-totter of like, what do you do? So far, I haven't been very good about it. Like if I would have, put the 1,500 from each of these towards, this, they'd be down another $3,000. Like I would literally almost be done with my watch loan, just $2,000 left. So that is something to keep in mind. I've not been very good at that now that I look at it. I want to change this to money formatting. I don't know why it wasn't, but here it is. So again, down to 15,000 in liabilities still. Working on it. And again, I've updated this too, so you can see that I've exactly paid. Sorry, just fixing that. That I've paid down $2,000. Still working on it. It's just tough because I see that I have, low interest rate as far as the car goes. And then the watch is quite a bit higher. So, not as good, but that's all right. Haven't updated the Mustang value or the Fiesta. I suppose I could go through Kelley Blue Book and officially get that because it's kind of unrealistic to think that my car's values have stayed the same. Possibly my Mustang because it's not being driven right now, but the Fiesta is being driven in miles. And then again, I haven't looked up what my watch value is, but I'm sure it's about the same. Again, not totally diligent as far as looking, but it is what it is. So then looking at from where the end of December was to the end of February, I was able to put in another $1,000 towards my investments, which in 1 month is really good because if we consider it, assuming I'm able to do $1,000 times 12, which is a little unrealistic, that's $1,200 that I could potentially have in investments. Or on the flip side, I could then use that money to pay off my car and watch on my current income. Now, part of it was because I got paid 3 times this month. That definitely helps out. But, either way I slice it, I'm paying down my loans, so then I have this extra income to then invest, or, I invest it. So, again, it's something that I'm going to try to split the difference because my goal was to have 5,000. So I could still easily reach that if I were to do, 6,000 and one, 6,000 between the both of them, 3,000 and 3,000. I'm really close to my goal right there. And then the other 6,000 goes towards this. And then this gets paid down quite a bit. No matter which way you slice it, it's good options. So yeah, these both went up. My retirement account did go up, but it also kind of did go down because it was at 1060, but because of the Ebola 2.0 that's out right now, everyone's freaking out. So it made my stocks for that investment account go down. Savings went up and down because I pull out of my savings to pay off this because I get into checking, transfer, and then it gets transferred out. And then obviously I don't leave anything in my checking at all ever because I use credit cards to pay, and then when I get paid, I pay it off. Yeah, it just works for me. So overall, my net worth has gone up to $16,368, which is awesome. Another $1,000 increase. Again, part of it's just because this is getting paid down. These are remaining air quotes the same, and then I'm just able to put more money into these. So really cool stuff. I guess I'll give you a peek at the graphs. It just keeps rising up. I don't know. I'm trying to figure out how to change the formatting on this, but I guess it makes sense because I have had months where I've had negative, where it's gone backwards. But on the next video, we will cover the overall changes in my M1 finance portfolio because I'll have that out. So, I guess if I just open it really quick, just as a quick reminder if you haven't seen it. So right now down here I have created by Joseph Carlson. So far this is what we're looking at. Obviously, when we took a peek at this, there's a $500 growth, so we'll be able to see that. And then we'll also see what we got for dividends as well. So that'll be really interesting to see because I did track this one, and in January alone, we're already halfway, which is awesome. And January is one of the lowest. So good things looking good things coming this year. I can see it besides everything bad that's already happened. So next video, we'll see this updated, and I'm really excited for that. But, you know, we're at 20 minutes now. I have pretty much covered everything I wanted to. I want to thank you guys again so much for watching these videos, or at least checking it out, a little bit of it. If you've made it this far, you have to smash the like button. It means so much to me. It helps on my channel immensely. It helps other people see this video. But I'm going to wrap up and enjoy my weekend off. Thank you guys. Take care.